We are live on Facebook. So welcome back. Welcome to the Creative Real Estate Podcast. I am your host, as always, Adam, AAA Adams. And today I'm joined with Ryan McKenna, who is going to help us understand how to raise more capital. This man has raised almost $30 million in the last 18 months, 4 deals, and I think he's got a combined asset value of over $600,000 that he is partnered in, which is incredible. His company is McKenna Capital. It's a private equity firm that provides opportunities for investors to become passive equity partners in institutional quality, recession resilient real estate focused on value add multifamily, self-storage, as well as manufactured homes. Welcome to the show, Ryan. How are you today?
I'm doing great, Adam. Thanks for having me on.
My absolute pleasure. And I'm blown away by your success. 6,500 units, $600,000. And
$600 million.
$600 million. That's a lot more than 600,000. Whoops.
No worries.
But you personally have raised almost 30 million. So tell us, kind of take us back. First off, my first question is to the very first real estate deal you'd ever done. What was going through your mind?
So as a passive investor or as kind of a co-syndicator raising capital, which deal you want me to elaborate on?
The very, very, very first real estate deal you ever did, however long ago it was.
Okay. So that would be back in 2006. I bought a single family rental out in Arizona. And this was kind of my first foray into real estate investing, kind of dipping my toe in the water, like most, starting with single family, and quickly realized some of the things I liked about real estate investing. But from the standpoint of dealing with tenants and getting those calls kind of late at night and everything that goes along with being actively involved in real estate, kind of turned me off. And I did a few more of those single family rentals, and then got into the larger multifamily syndications as I wanted to scale my business.
Okay, and up until not too long ago, you were in the corporate world. Is that correct?
I was up until about 4 months ago. I was working full time and investing passively on the side, and then starting my business as well a couple of years ago, while working a full-time job.
When did you know that you wanted to make the transition?
So I had always, at an early age, just known that I wanted to be a real estate investor and be able to live off the passive income streams. It was always something that I knew about, and it was just a matter of time where I can invest enough to be able to be in that position. And I started to get, close to that position about a year ago. And as I was kind of building out my business, I wanted to accelerate that position. So I still had a good portion of my W-2 income that I was, putting into these real estate syndications. But it got to the point where I couldn't keep up working full time and, growing this business. It was just too much on my plate. I knew it wasn't sustainable. But at the end of the day, I knew what my passion was. And so it was, an easy decision to kind of make the leap into, real estate syndication full time. So that's kind of how it, it led me to it. I built it on the side, and then it just got to the point where I couldn't do both. And it was a great decision for, myself, my family, and my kids, and just to have a little bit more freedom and flexibility in my life.
Love it. And one of the things that I heard you say right before we started recording is you were talking about the tax benefits. Ever since you switched from your W-2 into doing this, and I know you had a great career and you're doing well. I think the amount of money you're making now might be even a little bit more, but let's talk specifically, regardless if that's true, about the taxes. What's different about the taxes these days?
So there's a huge difference. And this is something I first learned about back in the early 2000s when I read Rich Dad, Poor Dad by Robert Kiyosaki. And if you think about, just going out there and working for a paycheck, trading, your time for money and getting earned income that is taxed at a high rate, especially if you do well there. And then, you have on the flip side, the investment income is, at a much lower tax basis with capital gains. And then the ability in real estate investing, particularly in the syndications I invest in, there's huge tax benefits from a depreciation standpoint, which offsets a lot of the income that you can make from these investments. So I started, going down this path of, converting my earned income over to the passive income through real estate syndications. And so not only am I, making good money, but I'm paying a lot less in taxes, for that type of investment income. So there was just kind of a plan, for me to do that. And, just like other investors are out there making investments, this was a strategy that I had learned at an early age, but needed some capital to finally get there and do it. And now I'm having fun with it, seeing it grow, and enjoying the many tax benefits that come along with it.
I love that. And that's something that we're passionate about for our passive investors, is to let them know that they will be making decent money. One of the biggest amounts of return on investment that I can find out there. But at the same time as making that, they don't really have to pay a whole bunch in taxes. Like if they're used to being in the 50% tax bracket area, this money is not going to be taxed at 50%. So let me ask you a couple questions. I want to understand what got you here. So in 2006, you got your first single family rental, dipped your toe in the water in Arizona. I think this was an out-of-state rental for you. Is that true?
It was.
Okay. Fast forward to the next deal that you did. What year was that?
So that was a few years later. I did another rental in Chicago, and it was, again, single family, had tenants. And that was kind of another tipping point of like, all right, I know about real estate syndication. I know about multifamily syndication. And I'd first actually learned about that when I was in college. I played baseball at Arizona State, and a teammate of mine, his father was an apartment syndicator. So he would come into weekends and be looking at these, 200-300 unit apartment complexes. And I just got talking to him one day because I was really interested in what he was doing. And he shared with me, what a syndication was and how he was pooling together hundreds of investors to buy these large apartment complexes. And so I always told myself that I want to do that someday. And I figured it was, going to be, through some investments and just building out my network and really kind of, being that syndicator. And so it took a while for me to get there, but all along the way, I was, studying, I was learning, reading, and just watching others do it. And so after a couple of the single family homes that I did, I just knew that I needed to kind of move up. And that's when I started, passively investing and getting closer and closer to the syndicators, and actually invested in 5 deals with my buddy's father in his business. And so that really kind of got me into the circle and really learned about, the great benefits, and kind of fueled my passion for, pursuing this, even further.
Love that. And so today you have $600 million of real estate that you're partnered in. Yep. Did you have that goal to accomplish this within 18 months, within 4 months of quitting your job? Was that something that you already had planned on, or did you kind of just find yourself with $600 million of real estate?
Yeah, it's the latter. I mean, I didn't plan on this. This has been just massive growth in a very short period of time. But it's also been something that I think, just with my network and just developing relationships over the years, it might look like this happened overnight, but I've got 15, 20 years of relationships of being in the business world, cultivating those relationships. So when great opportunities came along, I had the ability to bring other people into these types of deals relatively quickly. And at being a passive investor, before I built my business, I had people that were coming to me that were asking, hey, when you have great opportunities, please keep me in the loop, let me know. So I'd been kind of planting the seed for a lot of, the syndicated deals. And it was just a matter of, getting the deal flow. And that's really what kind of launched, my business, was the deal flow, partnering with other operating partners out there, because I went down a path of trying to do this on my own. And being here in Chicago, I didn't see the opportunities that I was seeing in some of the other markets, primarily in the Sun Belt regions of the U.S., where there's just tax-friendly, warm weather states where people want to live in, and headquarters want to be relocated to. So yeah, I literally started partnering with other operating partners, and just kind of grew from there. And we were doing like a deal a month, and everything just kind of was rolling, and the investor demand kept growing with the deals that were coming out. And so, yeah, it's kind of crazy to think 18 months ago, I hadn't done any of this. And now, 22 deals and, essentially $30 million later, it's just kind of amazing. And so, yeah, it wasn't just me. This is, a lot of partnerships, a lot of great investors. And I'm just lucky to kind of be, in this position today. And now that I can pursue it full time, I just can, only get better with, the experience I can give to our investors, to the operating partners that I work very closely with. So I'm very passionate about this. I love what I'm doing. I love talking to investors about going out and making passive investments, because that gave me the foundation to be able to walk away. I mean, I could have done that without the business, just from being a passive investor. So I want others to know that it's possible out there, and you can actually do it through real estate syndications instead of, the active investing in, say, single family homes, which, you can do that as well. I prefer to be more passive.
I love that. I'm going to be speaking by the time this airs on the iTunes platform. It's long gone. 4 months ago, this already happened. But for those of you who are on Facebook, I'll be speaking at the Dealmaker Live event coming up. And my presentation is focused on why multifamily, commercial multifamily, and then we'll answer the question, why syndication under multifamily. And one of the main reasons that I'm going to share in Dallas is this one little trick. Everybody else says, I don't want to partner with other people. Everybody else says, I want to own the whole dang grape instead of like a little slice of a watermelon. And what I've noticed, and how I'm going to show this to other people at the event so that they can say, wow, maybe I don't want to own this all by myself. I'll show that you might make 20% returns for yourself if you do it all by yourself. But if you put down a small amount of that money and raise money from other people, you can do a ton more deals, and the money that you'll make ROI, instead of 20% on your money, it's probably going to be closer to infinite or somewhere in the exponential level. You can still run the deals, you can still do all the same thing, but I'll be delivering exactly how that works. Ryan, you said something to me. Sorry if I cut you off. Were you about to say?
No, I was actually going to say that's a great point there. And one other thing I'll add to it is, from a diversification standpoint, like if you are a passive investor, or let's just say you're able to bring in other investors into your deals, I think it allows you to go out and do more deals, maybe in different markets, and diversify a little bit. And that's what I love about the syndication business, is that I can be an investor in any deal across the country, and I don't have to actively manage it. Whereas if you are investing in your own deal 100%, you're probably going to end up doing it in your backyard, where you're most comfortable with that market, and it's just, what you know. And so I think there can be risk in tying up all your capital into your own specific deal, and maybe limiting yourself to one market versus, having access to some great operators out there and some other great markets. So at the end of the day, I think a big reason for the passive investing in syndications is diversification. So kind of to your point, I mean, I think that, yeah, I'm with you on why I believe syndication is just a great model for investors.
I love it. I feel like you've somehow seen my presentation already, because that's on there too.
Oh,
all
okay.
right. Ryan, I have a question for you, and it's really important because I have coaching clients that I help them to brand themselves, to raise money, to raise equity for deals. And I've seen two things happen. I've seen people like you who took 20 years to develop relationships and cultivate them and prepare them for these opportunities, so that when they quit their job, when they decided to do syndication and start to actually raise the equity, somehow they have the ability to be in touch with the high net worth individuals from the past. But at the exact same time, I see people who are doctors and have a whole bunch of doctor friends, but they can't just ever unlock the money flow to their old network. And so when I hear my students come to me and say, this is going to be easy for me because I have all of these relationships, I'll be honest with you. What I've been saying is, forget about them, because we don't know if we can count on them. Let's brand yourself. Let's get you out in front of everybody else so that other people can start flocking to you. And I don't have to teach you how to overcome all these objections from everybody. We'll just show that you have the credibility, and then people will come to you. Yep. So again, I've seen a couple of people with your success, and I've seen a couple of people struggle breaking into their own network. And so what I've said to my students in the past is don't even try, don't even worry about it, don't stress about it. But I feel like maybe you have that key to teach us how to unlock that. So if you feel like, I mean, you've raised almost $30 million from the people that you've known for the last 20 years. What do you think you're doing differently from the people that are having a really hard time breaking in?
Well, I guess I would say, I mean, I'm not doing anything that's rocket science here. I mean, I am being myself. I'm truly passionate about what I do. I think others see that and they feel that. And, I'm putting my money where my mouth is. I mean, I'm investing in these deals. I've done deals previously as a passive investor, so I can kind of speak through that lens of what it's like and kind of walk them through a deal and kind of what to expect. But at the end of the day, my approach, this is not a sales pitch. I mean, I look at this as I'm sharing an opportunity with people out there, and there is no pressure to invest in any of these deals. And I just take the approach that I hope that that person I'm talking to would think of me if they had a great opportunity that came along, and they would want to share it with me. So when I first started, I put together a list of people in my network that I just wanted to, give them an update with what I was working on, what I was trying to do, so that, if and when it happened, I would then, reach out again, and then I can share them, something with more, more detail. And it all came very natural to me too. I mean, what I do, I love it. I love talking with investors because maybe it's because I'm an investor myself, and we're in this together, because I tell all my investors, this is a team sport. We are investing in a deal together. We're all participating together. Maybe it's a small piece of a larger deal, but we're in this, and you're not alone. And so I just feel like, that they feel that they can trust me, and that they know that I've done everything I could to put myself in a position to partner with some great operators out there, and that we're just very transparent with how we're doing it. But I think maybe it could be where you're not having success. Maybe you're trying too hard, or you're kind of coming off as being desperate, or maybe you think some of your relationships are stronger than they really are. And that could be, could lead you to kind of some false belief that you're going to, kind of just hit the ground running and have a ton of success in this business, because it is very hard. And the one thing I will tell you is I worked my butt off when I kind of knew that this was the direction I was heading in. I mean, I was doing 4 or 5 coffees a day, ton of calls, ton of emails. I was just out there building my network, expanding upon it, telling everyone what I was doing. And then from there, it just started snowballing, and I still haven't taken my foot off the gas pedal. I mean, I believe in just, cultivating and growing your network, because if you ever heard the saying, your network is your net worth, I learned that many years ago, and really, just love that I'm able to kind of share what we're doing with others, because ultimately, there's a lot of people out there that don't even know these types of deals exist. So it's been kind of my mission to spread the word, just to educate them on what else is out there, maybe an alternative to the stock market. And it's something that, I really believe in, that, a lot of people have done very well with. And so I actually haven't had, that many people come in and say, hey, I'm not interested in hearing what you have to say about this. And most people are willing to learn if you kind of present it in a way that, that there's no pressure and it's just an opportunity.
All right. So I am going to extract 6 things that you mentioned just now that differentiate you and your success from others who think that they have a strong network and that it's going to be easy to tap into it. I'm going to share 6 things. All right. So the first one is you're being yourself. I think that's incredibly important. I think that shows that you're consistent and you have integrity, and that you're not going to pretend to be anything that you're not. And I think that translates a lot when you're having a conversation with somebody. The next thing is that you are truly passionate. You are you love this business.
Yeah.
And I feel like maybe some of the people that have had failures trying to hack into their own network, I think it's because they're coming from a place of more desperation. I want to make money. I want to hack in. I want to be part of this. And so they're thinking of the end result wrong. And for you, you just love this, and you want people to be with you. And for others, they're like, I know that there's a crazy amount of money that can be made here. And they're thinking about that, not that they're passionate about the business. The third one is that you put your money where your mouth is. Some of the people that I know that have failed don't yet have the money to be able to invest, co-invest, and be there inside this deal alongside with other passive investors. The next one is that you said you walk them through the deals. And I think this is hugely important to bring out, because the psychology around walking somebody through a deal, regardless if somebody wants to do it or if they don't want to do it, if they can't understand what it feels like to go through it, they won't do it. They want to, but they can't, because there's this dissonance in their heart and in their brain, and it's just clamping their money up. They're unable to do it. But when you said that you walk them through the deals, I said, that's genius. That is one of the things that's going to make the difference from what many other people are doing versus what Ryan McKenna is doing. Is you're allowing the investor to truly see where they're going to go through the process. And that helps them to say, oh, I get it. I'm ready to go. Everybody else, oh, I don't get it. I want to get it. This sounds awesome, but I just don't understand it. And so I thought that was huge. The next one is that it's not a sales pitch. And that's the way that resonates with me the most. And frankly, a few of my students are like, well, how do I overcome these objections? And I like rip my hair out and I say, you don't. That objection means they don't want to invest. Like, there is no reason to overcome that. There is no reason to spend your time with them anymore. It's not a sales pitch. Yep. It's just being there and who you are, and you will attract the right people. The analogy that I use a lot on this podcast is magnets. And if you put magnets the wrong way, they're going to repel from each other. And this is the normal sales pitch. This is the normal, what most of the MLM people that come up to me. And if somebody's listening and they're an MLM, cool. I don't know if you specifically do this or not, but if you're failing, you're probably doing what these other people are doing. And it's pushy, 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 pushy. And that's going to make the two magnets push from each other. You need to turn around and stop sales pitching and just be an example. And you'll notice that people are magnetized toward you because of that. And the last thing that I noticed, the sixth thing, is that you said that you were having 4 to 5 coffees a day for a long time.
Yeah.
I don't know very many people in this business that are willing to have that many in-person interview, sit downs with other people. And I think that puts you over the edge. You're doing what only the 1% does. So you have all these 99% that are in the 99 percentile getting 99% results that are average. And you're the one who's being willing to go and sit down and explain the process, walk them through the deals without a sales pitch, with 4 to 5 coffee appointments every single day. I think truly, if somebody followed that formula, those 6 things that you just shared, I know that they will get the same results that you get if they're trying to hack into their own network. Do you have anything to add to that?
No, I think you summed that up pretty well, with everything. And I mean, I'm not doing anything that's, out of the ordinary. It's just, I'm willing to put in the hard work to do it, to get it right. And I'm willing to be patient with the investors because, again, a lot of them might be learning for the first time and they want to get educated, and it might take some time, and that's okay. And so, if you're just there as a great resource, and you can kind of put yourself out there as someone who's always willing to be there if they have any questions, I think people really appreciate that. And I think that's why I've had a pretty loyal investor base.
What's the most creative deal you've ever done?
So I would have to say that was a self-storage facility we did in Key West, Florida. And what was unique about this is it was on an island. So there was only so much land. And we purchased the self-storage facility and the 2 acres that were right near it that were part of it. So it actually became a development deal. We were able to build another 250 units on it. So kind of a cool deal where most of ours are value add, but this had this development component where we were able to kind of take advantage of a kind of a captive audience on the island that had a demand for self-storage.
What's a book you recommend?
I'd have to go with Rich Dad Poor Dad by Robert Kiyosaki. That was my blueprint for passive investing in real estate.
Now, my favorite question that we have on the podcast. It's been unique. I think other people are going to steal it. Where were you 5 years ago? And then the follow-up question is to explain what it'll look like 5 years from today.
Sure. So 5 years ago, I was in the commercial insurance brokerage space, was building out my network and my book of business there. I also had another side business, another side hustle that I was doing where I was doing really well at with making money and looking to put that into real estate. I'd also kind of been looking forward to going back to school to get my MBA. I wanted to, again, double down on my network. I did my MBA at Notre Dame for one specific reason, and that was growing out my network. So that was kind of, the plan back then. And, it was also to kind of start investing in real estate. So I'm happy to say that the plan worked out and I did all that. So if I look ahead 5 years from now, my goal is to help as many other working professionals, entrepreneurs that want to invest in real estate for the passive income and ultimately the financial independence that can come with it. And so I'd love to think, 5 years from now, maybe there's 50 or 100 other investors out there that are able to achieve financial independence through real estate syndication, like I was. And that and then also being able just to be there to kind of help give back and maybe mentor others that want to pursue a similar path.
Love it. And speaking of giving back, how do you give back today?
So I give back financially, obviously, with a lot of donations to causes that are near and dear to me, but mainly it's through my time in just helping others. Not only do I have a lot of investors that have questions that want to learn more, get educated, but there's a lot of other people that are maybe, were in my shoes a few years ago and were wanting to kind of know how I did it, or if I could give them some advice or some tips. So I'm always talking to people and trying to give my time and be helpful, because a lot of people were helpful to me as when I was first pursuing this, and I had great mentors and I learned a lot from them. So to me, it's about giving back and really, I think in my time is probably the biggest way I do that.
Perfect. The next question is, because there's so many people that heard you say that you love giving back by answering questions. Yep. I'm about to ask you to give your contact info out, and we'll see how you can get bombarded with some questions and give back and help a lot of people get involved into this business and kind of walk them through the deals. So, Ryan McKenna, what's the single best way? I don't need 10 different websites and other things like that, but what's the best way for somebody to find you and get a hold of you?
Best way is just go to McKennaCapital.com. It's my website. Everything's there. You can reach out to me with all my contact info, and that's probably the best way to reach me.
McKenna Capital.com.
That's correct.
Perfect. Ryan, thank you for coming on the show. Thanks for adding so much value to the listener. Really, really appreciate your time coming on and being willing to answer these questions and help other people to follow in a similar footsteps as you have. I'll let you go, but until next time, my friend, think outside the box.
Thank you, Adam. Really appreciate the time here.
Thank you.